Good afternoon, everyone. Good morning, good evening, wherever you are in the world. I haven't changed the title of my slides. Can you see that? The art of Fibonacci trading. It's not the art of Fibonacci trading today. It's the actual art of the Heikin Ashi candles. Let me just check. I've got the right. There we are. I've changed them all. As you can guess, I just copy my charts from one template to another, and I haven't changed the heading on this. We're not talking about Fibonacci today. That was that last week? Yeah. Fibonacci, love Fibonacci as well. I love Heikin Ashi as well. That's what we're going to be talking about today. Heikin Ashi Master Class, I've called this today very pompously. But there you go. So today we're going to look at, as I say, the history, tradition of Heikin Ashi candles, where it came from. Been around for a very, very long time. Why traders use Heikin Ashi candles if you've never heard of them before. The father of candlesticks created them along with Heikin Ashi candles. So Heikin Ashi candles actually came after the traditional candlestick pattern, which everybody uses on their, well, I'm saying everybody, I know 90% of people use on their charts today. We'll look at how they're constructed and how we interpret them. The power of the wick is really, really important with Heikin Ashi charts, and obviously not everything in the world of trading is simple. This Heikin Ashi is very simple. It gives a nice, simple, clear interpretation. That's why I like them. But obviously, not everything is perfect. Nothing in life is perfect. And the limitations of Heikin Ashi candles, just like any other interpretation of price action, has its drawbacks. So we'll have a look at that as well. Those of you that are new to thePropTrade.com, welcome. Thank you for your time today. If you haven't got an account, why not? There's absolutely no reason you shouldn't be trading with us. Those of you on a bit of background on myself, my name's Stuart. If you don't know me, I've been around for a long time. I've worked for CFD brokers. I've worked for banks. I've worked for investment banks. I worked in the City of London for 20 years. I was in Cyprus for 20 years, not always in financial services. I've done all sorts of other things in Cyprus before I went back to financial services in 2015. But from an investing and a trading point of view, it's all about understanding yourself, knowing yourself. And my little mantra is, do what's probable, keep it simple, and it's really is all in the numbers. So if you understand leverage on your account, you understand margin, you understand the asset you're trading, understand the difference between trending and non-trending markets, retraces and changes in direction, you can move very, very far forward in this business, and there is absolutely no limitations to your earning potential. Obviously, most people lose money trading, unfortunately, because they lack the discipline, patience, some of all the basic stuff our grandparents and our parents taught us when we were very, very small. So Heikin Ashi is just a different way of interpreting price action, but it's been around for a long time. I really, really like it. It takes a lot of the noise and the friction out of the market sometimes. It just is what it is. And it's not perfect by any means, but hopefully today you'll leave this with a little bit of better understanding what they are and how they can help in your trading journey. So background, so created by a guy called Musima Honoma. He's a rice merchant in Japan in the Sakata area, and he traded the dojumi rice market in Osaka. Very much on an end of day basis back in the 1800s, and he's considered. I've written here sometimes, but I would view him very much as the father of the candlestick chart. The Sakata Constitution. If you Google Sakata Constitution, you'll see that this sort of document that he wrote down, creating all these different names for all these different candle patterns over the years. And out of standard candlestick formats came the Heikin Ashi charting approach. Heikin Ashi hasn't actually got an exact translation from Japanese into English. Obviously, Japanese use characters, Chinese use characters. Obviously, the English alphabet uses individual words. So average bar or average weighted average is a sort of a very crude sort of interpretation or translation of Heikin Ashi into English. He was very, very, very successful. In today, there's a documents talking about him making an equivalent of $10 billion just as a rice trader back in the 1700s, just trading this one simple market on an end of day basis in Osaka. He's reputed to have had 100 profitable trades in a row, 100 consecutive profitable trades. I know you see that, you see it all the time these days on the internet. People claiming to have 89% hit rates and 90% hit rates in their trading strategies. But this guy was real. He created all of this. And the issue about this 100 profitable trade is a bit of a legend, but it wouldn't surprise people who are around him at the time, and certainly believed in technical analysis wouldn't knock that back. Japanese society back then was very, very rigid. It was very, very structured, and everybody sort of knew their place. But because of his skill as a trader, he became to be a very, very significant financial advisor in Japanese culture, and particularly to the Japanese government. And later in his life, he was actually elevated to the very, very significant position of honorary samurai. Samurai obviously were held in very, very high esteem in Japanese society and still are today. And to actually be promoted, that was a very, very significant honor within a very structured Japanese society back in the 1700s. So he's a very significant man that had a big impact on the things we do today. And Heikin Ashi candles and normal candlestick patterns are stuff most of us use on a day-to-day basis. Why do we use them? It's graphically, it gives a really nice clear interpretation of what's going on, so it can be a wee bit faster. They're easier than standard candlesticks to understand because there's less subjectivity in them. They're great for filtering out the noise of the market. Is it still going up or is it going down? Is it still going down or has it started to lower down, to smooth out? And the other key thing, it wraps up lots of different approaches in one simple candlestick. You can use them as an indicator. It's a real strong indicator of sentiment. The trend is very, very clear, and momentum can all be interpreted in one or two candles or even one single candle. And they also they're time frame independent. I've used them before on 5 minute, 2 minute, and sort of 1 minute charts. They're not, you've got to accept their limitations when you're using them as a scalping tool. But as the time frame increases, I find they've become more and more significant. So the hour, 4 hour daily time frames, very, very significant, especially the end of day time frame, very, very significant, very, very powerful, very clear at chopping out all the noise. And the current sort of market conditions we've had with all this chopping around with the Trump tariff story has been quite useful for looking at charts with Heikin Ashi setups at the moment. They're very, very simple. They're just a click away of setting your charts up on the TradingView platform as well. Before, other older software packages, you have to interpret. You have to actually apply the software, but it's very, very simple in TradingView just to click the candle setup. So did I jump forward too far? Did not know. I'll bring up some live charts in a minute, but this is just a screenshot of from today of the S&P 500, and you can see hopefully what I'm touching on. I might bring up some charts and make it bigger. Actually, if I make myself a wee bit smaller down there, that makes the chart a wee bit, doesn't make much difference, does it? So here, this is bang up to today. I did the screenshot this morning, and you can see here in these last candles how different, well, not how different, but the difference between normal candlestick patterns and the Heikin Ashi candle. You see here on the Heikin Ashi candles here, these last four, 1, 2, 3, 4, they're all green, they're all positive. Red is negative, green is positive. That's just the way these the candles are set up here. You obviously select your colors I know lots of people that use them with white backgrounds, and they have white candles and black candles. But anyway, just the colors, it's up to you. But you can see here with normal candlesticks, you can see the last four. Today's was positive. That was positive, but Friday's Thursday was red. Here, the third candle back here in today's in the Heikin Ashi candle is still green. So it's still, so we've gone big move down here: red, green, red, green, red, green, green. Here we've got four. You know, the trend is still up as far as the Heikin Ashi candle is concerned. So all the panic the down day, you know, it's just all the Heikin Ashi candles telling you to stand firm, you know, or hang on to the upward movement. Let me just bring in a live chart, right? Explain it, show it a bit better. Use the today's just make the chart bigger. So to add Heikin Ashi charts to our trade locker, our trade view platform, you simply look at the description. So let's just go back to a line chart. So this is a standard, this is a line chart for the US Dow 30 on the hourly time frame. The line shows the mid price of the hour that we're looking at. Most people don't use line charts anymore. Some people still use bar charts. Again, so that's again showing you the open, high, low, close of the hour. So open, high, low, close on that particular hour there. So that's open, high, low, close on the bar chart. So, but what we normally see, I said 90% of you out there, 95% of you out there will use standard candlesticks. Again, using the same thing. So this hour here, we've opened here, we've closed here, we went as high as the top of the wick there and the low of the bottom of the wick there. So that's what we normally see on our candlesticks, isn't it? If I flip this now to this same price action, you can see here the price is at 46.78. You know, watch the price line here. Well, that's not going to move. It's right at the top of this. The hour's just started, hasn't it? So we're 15 minutes into this current candle. It's quite a small candle. We haven't moved around in this current hour. So if we flip this, the view of the price action to Heikin Ashi interpretation, we'll see the candles change a little bit. Let me just do that in real time again. So you can see here the trend is, you know, it's green predominantly, isn't it? Much greener here. There's only two red ones. If we go back to the normal candlestick setup, there's normal candles. That's there. You see, there's more indecision. There's more red candles, isn't it? In the same time frame, we've got 1, 2, 3, 4, 5, 6, 7, 8. So the way that candles, I'll come to the how we construct the candlestick, the Heikin Ashi candlestick in a minute, but that's a pretty good indication of the difference between normal candlesticks and Heikin Ashi candlesticks. Okay, so Heikin Ashi candlesticks, don't panic. We're all still green, or, you know, green out, green again, or up from whenever this was, 5 o'clock this morning. Dow's been positive as far as the Heikin Ashi trade is concerned. I mean, he's still positive as far as the normal candlestick trade is concerned, but he's had less sort of reasons to get out of the trade. Okay, so I'll come back to the live charts in a minute. Guys, if there's any questions at all, please stick it in the question box. If it's anything you don't understand, please stick it in the box. FX Growth saying good morning to you, sir. I don't know where you are, lady. I'm same, sir. Trader, FX Growth, thank you for being here. So that's Heikin Ashi candlesticks compared to normal candlesticks, what we used to staring at. So where have we gone? There, I've just gone through that, haven't I? So normal candlesticks are composed of a series of open, high, low, close bars set over time series. Heikin Ashi text uses a modified formula. I'm going to show you the formula. I know I've just shown you how easy it is to just click at the charts, but I think it's important that we understand how this is created, so we got a bit of a feel for or respect for you know, Honma all those years ago. So this is the hourly chart on the dollar. This morning, I can't remember. Yeah, 140. So this is 110, 112, 114. This is the, what's this? This is the hourly chart, you know, trending upwards, standard candlesticks, as we've just seen with the the Dow, didn't we? So normal candlesticks, open, high, low, close over the time series that we're looking at. Now then, what Heikin Ashi does, it still uses open, high, close, it still uses close, open, high, and low point, okay, but it uses the average price of the two previous candles, okay. So the close on a Heikin Ashi candle, so the bottom of a normal candle, is the average price of the current bar. So it uses the open price, the high price, the low price, the close price, and divides it by 4. Simple as that. Okay, that gives you the close of the candle on a Heikin Ashi candle. The open of a Heikin Ashi candle uses the open of the previous bar equals the close of the previous bar divided by 2. So it's the midpoint of the previous Heikin Ashi candle or bar. Okay, that's why when you look at Heikin Ashi candles, they always open in the middle of the previous bar. So a new Heikin Ashi candle will always open. The opening point will always be the midpoint of the previous bar. Again, if I just bring in, I've lost my. Why have I lost my chart? If I bring in my chart here again, let me just go through that in a minute. Come back to this as well. If we just put Heikin Ashi candle, you can see that the opening of the candle is always in the the opening is always in the midpoint of that bar. That bar there, that one there, the 6 o'clock one this morning, has opened in the midpoint of the previous price action. Okay, that's what the opening does. Let me just put that there so I don't lose that away. So so that's the open and the close. The high of the Heikin Ashi candles is the maximum over the last 2 candles. Okay, and the low is the lowest value in the set. So it's the low of the open, high, low, close. So it's the maximum. The highest point is the maximum of the open, high, low, close, and the low point is the low value of the set. So it's the low of the low, open, and close. So it's averages out. So it looks like a normal candlestick, or look very similar to a normal candlestick, but it's using this weighted or this averaging technique to smooth out the price action. That was Homer's interpretation. Okay, so it looks like a regular candlestick, except with the values we just talked about above. The time series, as I said before, that's dependent. It's up to you. You know, it can be applied to all time frames. It's time independent. But as I say, I've had the better response, better performance on the hourly and the sort of hourly upwards, basically. Below hourly, it can chop around a bit more, a bit much, and you're quite a long way from the price action sometimes. I'll come on to that comment in a minute. Okay, down days are represented of, you know, again, just depends on your candles on, you know, filled bars, red, filled bars, empty bars, reds, whites, greens. Depending on the chart you want to use, it's up to you. But obviously, it's the difference between the colours or the difference between a filled bar and open bar can be quite significant about when to change direction. Again, a bit like we had before on the hourly chart. Some people, one way of trading this is, sorry, let me just bring that up. You know, just be short when it's red, be long when it's green. That's very, very crude, but you know, I've seen people use it before. So you've been long here and got out here when it went to red. Look to go long on that green, wouldn't have worked out because you've gone short on the red, and then that's been a loser. That would have been a loser. You've gone long there as it's gone to green, and you're still long, basically. So just very, very crude way of doing it. But you know, it's because of the smoothness of it. If you've got a strong trend, you can see, you know, you can make some very, very significant returns, right, on this movement here, for instance. Okay, so that's where we are. Different colors. As I say, the result is this smoothing of the price action, a chart that looks very simple, like a normal candlestick chart, but has an awful lot of information within it as well. That's how Heikin Ashi candle charts are constructed. Let me just see if you can see what I'm going. Yeah, okay. Just my head's in the way there, isn't it? Of the words. Would be better if actually, is it better like that way? It's better like that, isn't it? Because it's bigger. Just put my little head stuck in getting rid of some of the words, unfortunately. There we are. That's the construction of Heikin Ashi candles. Where's my keypad's not working properly? There we are. 1, 2. Interpretation thereof. Okay, as I said, what the key thing with Heikin Ashi is its strength is in the trending market. So we're looking for a strong trend to stay in when we get a move, okay, and then trail our stop loss, our money management technique, which is all about the tricks of making money as the trend unwinds. When the bodies get weaker or smaller, or begin to change color, you can suggest also it might sense that there's a change in direction happening. It can happen very quickly, and that's the issue with the lower time frames. If we've got a long, persistent trend, Heikin Ashi really is your friend. It just keeps you in the market, and you can scale in and scale out on the size of the candlesticks that you see in front of you, the body of the candle. So if you've got a big fat bodied candle, whether it's positive or negative, that's a potential strong trend either about to start or in play. You want to be in that and following that up. As the candlestick body start to weaken and we get wicks to the north and the south, I'll come on to the wicks more in a minute. That's deciding that we may be slowing down. There may be a reversal or a simple correction. So it may be time to reduce your risk, maybe get out completely, and then turn around. We'll see what happens. But that's how we interpret candlesticks. The strongest trends are displayed with no wicks or shaved candlestick. If you're looking for an uptrend, for instance, you want a strong, big-bodied candle with no wick to the south, no downside candle, no downside shadow. No downside wick or no downside shadow. The trend is strong, and you either want to get in or stay in. Don't get thrown out. The beauty of keeping your stop loss below, it allows you to trade up. So again, if we look at our standard candles again, just going back to this hourly chart on the Dow. Again, I could have picked anything else, which happens to be the Dow that's open here on my chart at the moment. So what we're looking for a strong trend. So we want no wicks. So here we've been going up quite nicely. No wicks to the south here. This is strong. So if we just go through this. So that was a red candle. So we went from red to green. We might look to get in here, but remember the open high, high, open, low, close, open. It's not the same with Heikin Ashi candle, as I just said before. So the red, so we would have got in, but we wouldn't have got in here at this point. It would have been a different price actual entry point, but the positivity of the green candles improved. Then it got a bit, it was a bit of a squidgy one. We got a doji candle. So the doji candles on Heikin Ashi candlesticks are exactly the same as they are on normal candlesticks. It's suggesting uncertainty. The buyers and the sellers are in balance, so not a lot going on. Again, it's the body of the candle is key. So we can see the body of the candle here is key, and we can see shaved, no wicks to the south of these 3 candles here, 4 candles here. So it's a strong trend. We get a bit of hesitation on this one here. If we just screw it, move in, then we get a stronger one. Then the body of the candle shrinks quite significantly, doesn't it? Before we flip to red. So again, just using a simple color trend flip, we would have been in here and out here. It's a very small bodied candle, isn't it? The 2 red ones. So it's just a stalling. It's not bigger than the previous green one. So you'd wait for perhaps a bigger red candle, bodied candle, to look to go short, but we don't. We immediately then go long again, but it's a weak one again, isn't it? We can see that the bodies of the candles are weak for 3, 4 candles. Then we go to red again. So we got this hesitation around here for whatever this is, hourly candles. So for 1, 2, 3, 4, 5, 6, 7, 8 candles, Is it a certain time? Who knows? Is it a certain price level? Not really. 38,680. It's not real price level that's causing it. Before there's a correction or a breakout to the upside for the next 4 hours, and it starts very strongly. It starts quite positively. There is a small wick on that one, but the next two, there's no wick to the south of that, so it's very positive. So you could have added here, added here, added here. A suggestion that this candle here that may be running out, this 3 candle pattern may be running out of steam. But again, like with normal candlestick interpretation, normal candlestick patterns that when we look at, that sometimes they run out of steam after 3 or 4 candles anyway. So if you get a swing candle or a morning star or evening star or whatever, 3 white soldiers, 3 black crows, whatever the interpretation, sometimes candlestick patterns tend to falter after 3 to 5 candles anyway. So again, bear that in mind. But here it was positive, and then all of a sudden we went from what would look like a really positive or relatively positive move here at 2 o'clock on the 8th of April. We got a bit of cooling at 3 on the 3 o'clock candle, but by the 4 o'clock candle we completely flipped. We'd gone from what would look like a pretty strong uptrend, having stalled through here in the morning, to a definite downtrend here at 4 o'clock on the 8th of April. Happens to be round about US Open time, isn't it? 4 o'clock. No, it's after US Open, but that's a very that's a very positive trend down. So from long, we went very strongly short, and you can see as you can see, the body of the candle has improved, got bigger. Body of the candle's got bigger. The wicks got longer. There's definitely no wick. So a very strong downtrend starts to slow down here at close of business. That's 10 o'clock London. That's 10 o'clock my time. So that's 10 o'clock London time. So the cash closes as an hour before. We slowed down, but we continue to move down into the open and Asian session. A little bit of a uptick, down again, down again, down again, and then we turn relatively positive. We turn positive on the European Open, and a big positive start to European Open before it's reversed during the European session. And then here, as the US session opens up here on the 9th, we get a relatively positive one again. So that would have been short for a little while, then lost, and then and then a massive bid to the upside. And that's the volatility we saw on the 90 on the hourly time. So you see the strength of that, but then it soon filtered out or ran out, and then we moved down with a bit of indecision. But again, you see we moved down, but we still biased up. So this down leg was just again looking at normal other interpretation, not just looking at the Heikin Ashi candles. You can see that the retrace was if you look at our put our fib levels on here again. We had a down leg and a big up leg. We've had a down leg, but we've moved and we continue to move up. Quite weak, relatively weakly compared to the volatility we had these 2 days here. But during Friday and into Monday start here, we're starting to move back up. So obviously the key thing, as with all candle analysis, would be the test of the high at 40, 90, 35 is the real test today, isn't it? Are we going to go back to where we got to on the 10th? Is it the 10th? That Friday, or was that that was Thursday's high? So but the suggestion is here, the size, the bodies of the candles are not looking particularly strong, are they? They're not big. There's no momentum compared to the move we had late last week on there. But anyway, we're still positive here on the hourly chart on this Dow move. So again, I hope that makes sense. So we're looking for big body candles with ideally no wick to the south if we want to go long, or ideally no wick to the north if we're wanting to go short. And we're with the trend, because green means long, red means short. Don't fight it, basically. And when we get a flip like this, get out. And that, but you had a suggestion of that because the bodies of the candles were getting weaker. You can see here there's a suggestion that this move up is not great, because we've got rejections of higher prices over the last couple of hours, small bodied candles. So you wouldn't be surprised if we get a red candle or two as the US session opens, which is literally now, isn't it? It's 2:30, so US session is just opening. Oh, you can't actually see that, can you? Because well, I'm just looking at what you're seeing. You can't see that. There we are. Perhaps I'll leave it like this. And you can see the interpretations to the upside. Okay, we'll come back to the live charts in a minute. Don't worry about that. Hang on a minute. Going there. Need to join there. There we are. There we are. So the strongest trends, shaved candles, either north, upside or downside. Okay, dojis have the same meaning when we're looking at standard candlestick interpretation. Also, everything you might have learned about normal candlestick patterns, they're still applicable with Heikin Ashi candles. However, you got to bear in mind that the maths is different. We're looking at averaging candles. So if you apply another indicator to Heikin Ashi candles, as I would recommend you would, rather than just using them on their own, but I really like them just on their own with no other lights, moving averages or trend lines or anything on them. But if you add another indicator such as the MACD or the RSI, the maths that the RSI is performed on is based on the Heikin Ashi candle formula as well. So it's a little bit different from a normal additional indicator. So again, just bear that in mind. Where's my chart? Oh, there we are. So real problems moving the slides today. So there we go. That's just a screenshot I took from a presentation from Reuters. So no upper wicks on the way down, no lower wicks on the way up. Now it's saying it much more succinctly than I did before. The message is counterintuitive, but the force is strong. Again, so black candles on this chart are negative, and unfilled candles here are positive. This happens to be the S&P 500 back in 2014, so 11 years ago. You know, trends as much then as it does now, but we were at 2000 and here we are, more than double that, 5,000, 6,100 this year, haven't we? So you know, that's what we're looking for. No wicks to the north, to the south if we're going long, no wicks to the north if we're going short. And the bigger the body of the candle, the more significant it is. The doji candles, the small bodied candles, have exactly the same interpretation. As it's balance, it's buyers and sellers, supplies and demand, all in sort of potential balance, and no clear direction. The trend is not clear. Again, this is another screenshot from one of my old charts. Here we got blue and red rather than white and red or black and white, but you know, the theory is the same, or the technique is the same. As you can see, just the colors have changed. So this is euro on the daily back in 2021. Strong trend up, strong trend down, strong trend up again, you know, and then a trend to the downside. Here I've added some of the longer term simple moving averages, or exponential moving averages, I should say. I did some research a few years ago, particularly for stock markets, this was, and the gilt market. This is a chart from the UK gilt market, the bond treasury markets, and the smoothing of moving averages. I found the higher time, some of the higher time frame, people were asking me about higher time frame moving averages, and the 49 and the 13, when I did some back testing, I think it came out at 49.2 and 13.3 or something, as it was the best settings for your exponential moving averages on an end of day time frame for stocks and for treasuries. Obviously, you can't use those points in the moving averages chart, so I set them at the high time frame at 49, and the lower, I mean, it's not particularly low, the 13 rather than 50 and 21, 15 or 10 or whatever. But anyway, by and by, that's why those two lines are on that chart. But again, what we're looking at here is really the colours of the candles. So here, obviously, the moving averages don't cross till you know, 3 or 4 candles afterwards. Here, the moving average crosses after the way after the the red candles turned blue, and the way after the 3 or 4 candles after the candle shows no wick to the south. But as you can see here, even with the Heikin Ashi candles, we get a strong move, and then we're out. Not, I say, not necessarily short because the bodies of the candles aren't great. So not sure that. So it's indecision because we've gone from red to blue, then back to red again. It looks like we're going down. Big volatility and then a big follow through. So we late into that one, but the trend continues to be up. And we're here. We happen to remain above the 13 exponential moving average and the 48 exponential moving average. So we're looking to buy this as that's moving up. But yeah, it's as with all indicators. Be cognizant of their limitations when you're just using them on their own. So signal the message in the action. So white candles or green or whatever color you're using, upper shadows, no lower shadows, a strong trend. Buy if you're not already in, hold if you are already in. You got a white or green candle expanding without lower shadows, it's an uptrend. Add to your position. So the other thing about if we just go back to the previous chart, the beauty of the candles, you can scale in and scale out and just add to the position, or you just buy, or you put all your risk on at once. Wait till there's wait till there's actually, might be a better one. Yeah, wait till. So all this has gone from that's a potentially strong negative candle, that red one there. So you'd have gone short at this point, but immediately you would have stopped out because it's gone from, not only has the color changed, but we've got wicks both to the north and south. You could have either bought on the following candle, again, depending on the rules, and then added to it on the next candle, and then added significantly on the third candle because we've got no strong, and there's no wick to the south of that, and then added again here. Some traders would have waited for this, having been short here on the, for instance, not using just being a bit more conservative, waiting for the lack of wick. So they would have been looking to go short here, but entered here with the no wick rule. Stayed short, depending where their stop loss was. They might have got stopped out with on the volatility down. Added to their short position here, these conservative, but then got taken out straight away because it's gone from, so we could have been quite a significant losing trade on blue. Waited till this 1, 2, 3, fourth candle here, big body candle, no wick to the south, very strong entry. So they might have entered strongly here, added to their position here, and even added to their position here. Been cognizant to close some of the position here on this fourth candle as we've finally got a wick to the south, and then got closed out this big strong move here as we've gone red here, and then done the same here, got short, closed some of it out, closed some of it, some of their position out, left some of it on at this one because the body's finally shrunk, and then got out everything, and we've gone blue, gone long blue there, and then got out because it's gone red. Short again, out, long, still long, bit of a worry there, may have closed some of this position, added to it again, added, look to close some of it out because we've had a really strong positive move, and then get everything out as we've gone from blue to red. This day gone big short again, big short again. So it's horses for courses, my friends, but that's the way to scale in, scale out, and that is just, look what we've just done there. We've covered, I don't know, we've gone from the middle of July to the middle of September with 3 or 4 big moves and 3 or 4 big winners. Obviously a few losers along the way, but just simply on a daily time frame on this asset, just using the Heikin Ashi candles only as our reasons for getting in and getting out of a trade. Okay, great for trending markets. When the markets are going sideways, Heikin Ashi candles have a relative problem. So that's what we were looking at. We've looked at that one, haven't we? So this is what this chart is saying here. So this slide is saying. So small body, upper and lower shadows, looking for a trend trade. So consider getting out or going square, flat. Okay, potential reversal imminent. Change of body color or candles with wick above and below. Indecision, be square. So again, get out So this is change of color. So we're using here, we were looking at black and white candles. So this would be a red candle, low shadow, downtrend, sell if not already into it. Red candle, black candle, depending on the color of the candles, expanding with no upper shadow. That's the strong downtrend we were talking about. That's what we just looked at. So add to your position, or make sure you are short if you're not already short. That's what the candles are telling you, because of the nature of the way the maths works with Heikin Ashi candles. Okay. Okay, not everything in life is perfect. Some significant, not significant, yeah, some key things to bear in mind when you're looking at Heikin Ashi candles, and it looks like it's really seems like the best thing since sliced bread. I think they're great, but there are some key limitations to them. Okay, the use of historical price by the base, so time gap. There's no lag involved. Okay. The use of historical prices where the base signals Heikin Ashi indicator are based on means that there is a no lag. There is a time lag involved because of the nature of creating the candles. Again, let me just bring the chart back up. The chart back up. So this is remember these prices are sorry. Candles are based on the previous two, so it's creating. Remember, they always open in the middle of the candle of the previous previous candle. So it needs these candles to complete before it can create its new candle. So there's a bit of a lag on that as well. Okay, right, move that down there. The lack of prices. Some traders, many traders, look for gaps price gaps to analyze what's going on with regard to momentum and entries and positioning loss. You don't get that with Heikin Ashi. There's no gaps on the chart. Some people think that's quite a issue, because some short-term traders in particular are looking for gaps in the market. You can see here there's no gap at all here on the Heikin Ashi candle. If we go to the standard candle, because of the big start today on the from Friday to Monday, where's my normal candlesticks? This is it's not. It's not. Yeah, you can see there's gaps in the chart. There's gaps between the candles. We don't get that with Heikin Ashi. It's better with. Let me change the asset. Show you better. It hasn't actually shown it very well. Let's look at the euro this morning, for instance. So yeah. No, it's not good enough. Why isn't it sure? It's those gaps on that one either. I'm trying to find one that demonstrates it. Gold. No, these are normal. It's normal chart. I thought there'd been a gap on the gold mark. There should be now. Go back to the indices on the daily basis. Let's go back to daily. Should show. There we are. There we are. Sorry about that. All right, so this is it's better demonstrated here on the daily time frame. You see the gaps in the opening and closing. So some traders like this, because of what's happened. This is the Dow again. So what's happened over the weekend? We had that clawback on anything electronic. There weren't going to be any tariffs on there, and so that's lifted. Actually, let's use the Nasdaq as a better example because it's moved up more significantly. So on we had a a massive day on the 9th. We went down on Thursday. We went back up again on Friday here on the Nasdaq, and then over the weekend, I'm sure all of you have seen, we had Trump and his cohorts talking about exemptions for electronics, everything electronic, basically smartphones, computers, There won't be the tariffs immediately, at least, and so that's lifted overnight, pre-market and in opening trades. That's lifted tech stocks in particular. That's why the Nasdaq's moved up. And if we come down the time frames, you can see how that happened. But less of a gap. There's the close on Friday, and there's our opening trade last night, and we've sort of moved up. And then he sort of pulled back any enthusiasm as well. So we've gone nowhere basically. You see in the 4 or 5 candles of today's trading, and again you see there's the gap even more exaggerated on the 1 hour chart. Now then, if we switch this, this is a better example. If we switch this back to Heikin Ashi candles again, keep watching the gap disappears. So, you know, as I say, lots of people, well, not lots of people, lots of traders do use the gap analysis as part of their trading, and you don't get that with Heikin Ashi. Minor point for some would say, but for some it's quite key. The lack of price action is the other one. Now then, this is again, it's a good example. This is showing quite a hefty spread at the moment on the Nasdaq, but you can see here with the price, with the Heikin Ashi candles, the difference between where the price is and compared to where the chart has been. So this is Heikin Ashi candles. You see the fairly hefty spread at the moment on that, but you can see the difference. We then go back to where the price is, you'd have to pay whether you're going long or short. If we go back to normal, sorry, make it normal candlestick, you can see the not only is the because it's on, I've only got one measured on here. The price is right on where the current candle formation is. Okay, so that's one of the other things. Some people, and I've done it in the past, have both charts up, both the normal candlestick for setting your stop loss and your entry points, as well as the Heikin Ashi for determining the trend. So the Heikin Ashi candle still remains. Sorry, the Heikin Ashi. Let's go up to the 4 hour because it's Heikin Ashi. So current candlesticks have been sort of a positive start to the week, but relatively negative so far. We've got the Heikin Ashi set up. We can see it's still, as far as the Heikin Ashi is concerned, it's still positive. So it's all that the negativity that's being suggested by the normal candlesticks, the normal open, high, low, close, because of the smoothing and the interpretation of the Heikin Ashi candles, you're still positive. And you've been positive from 3 o'clock on Friday morning. So you got all of Friday's rally. So it's still positive. Obviously, the caveat is you can see the bodies of the candles having got big, positive, but it's slowed down, hasn't it? So there's no wick at all on any of those three. There's a wick forming on this current one, which is still got a few hours before it's completed. But you can see the body of the candles has started to shrink. So there is a suggestion that may be cooling down. And if you were using normal candlesticks, just get this, I'm sort of laboring this a bit, but you see normal candlesticks perhaps would have already suggested this isn't going anywhere. I got in this morning, I might close this out now here, but you might have got out too early as far as Heikin Ashi candlesticks are concerned, but you might have also protected your gains for Monday so far. So pros and cons. Lack of gaps can be a big issue for many traders. Okay, hope this is all making sense. Lack of price gaps, yeah. And I sort of just been talking about this third point as well. Because of the way that the candle is created, it's a weighted candle, it's an average price. It does not show the actual opening and close price. So the candle, as I said earlier, always opens in the middle of the previous price action. This may not work well for day traders or scalpers and with more active assets, because we can end up chopping around a lot, and you can be a long way away from the price action. However, you know, I have used it as a scalping tool before, especially when you've got a strong trend. I've flicked it from, like we were doing now, flicked from normal candlesticks to Heikin Ashi candlesticks. Oh, actually, don't panic. You know, the trend is still set. We haven't. There's no sign of cooling yet in the. Although the sign of hesitation in normal candlesticks. Heikin Ashi candle saying, you know, it's still full on. There's no either wick forming. So that's a positive interpretation of Heikin Ashi candlesticks. So there we go. It's not perfect, but again, these are just some examples on different time frames. This is the euro on the 5-minute time frame. See strong, no strong, but 1, 2, 3, 4, 5, 6 on a 5-minute candle. You see the differences here. Positive, negative. Sorry. Negative, positive, negative, negative, positive, positive. This is one still negative. 5-minute time frame. Again, the idea of cleaning the noise away is great when you're comparing it to a chart full of moving averages or other indicators. This one's got RSI, ATR, it's got Bollinger Band, it's got moving averages on. We've got positive candles, negative candles in all of this downtrend. It's even got a pivot point mark there. Here, same time frame. Heikin Ashi candles. He's just short, isn't he? He's red. He's strong short. Here, normal candlesticks, a bit of a mixture of short and long. 5-minute time frame. I say it's practical and it works on all time frames. Here's the 4-hour time frame, same chart. That's very much downside, isn't it? This is obviously still a downtrend, but there's a lot of hiccups on the way down, isn't there? Here, we finally flipped from red to yellow, so we'd have been short from here, certainly all the way there. Here, we've had a lot of nice start, then we might have got in again, got out there, perhaps. That's still that's an up candle, and the next one's down candle. These ones are talking about up candles here on the Heikin Ashi 4-hour time frame. So it's horses for courses. If you're a bit sort of confused about what to interpret a trend or a chart, stick a Heikin Ashi setup on, and that'll clear things. I use that quite a lot. So in summary, green body candles with no wick is a strong trend, or whatever colored candles we're using. Look to be long. Add to your position. Once you get a sort of a balance where we've got upper and lower wicks, we may be looking for a change in direction. But again, wait for confirmation. Wait for a bigger body candle in that direction. Once you got a red body candle with downtrend with no wick to the north, you want to be short on that, and the stronger the trend, the longer the candles will continue without any wick either to the north or the south, and just let your profits run stay in the market. So just going back to our live chart here on the Nasdaq, here on the 4-hour, the current, it's lots of chopping here on the normal candlestick pattern. On the 4-hour time frame, the Heikin Ashi candles, as we said earlier, still remain. Don't panic, stay long for now, is what this is telling us. There may be a cooling because we've got a smaller bodied candle in this current candle, but it started at 11. It's going to finish in 5 minutes, and that still looks like that's going to be green. So obviously the downside of it, there you can see where the price is there. The downside of it is that this one, if we go to the 1 hour, actually same Heikin Ashi setup. On the 1 hour time frame, it has been, we've been again another one that went long here at 6 o'clock on 11th on Friday night. So it's been long into close, long through the Asian and the European session, and turned short here. Sorry, at sort of halfway through this morning at the London session. Looked to be going possible short because there was no wick to the north, but you see the size of the candles, not a lot of direction. So you would have perhaps not taken that position on the size of the candle. What is clear now, as the stock market is actually physically open, remember these are all derivatives with the US stock market not open, the Nasdaq's open, there is a clear suggestion this current hour, as we're about to finish in 5 minutes, this candle complete, there's a clear interpretation that there's as we may be completely run out of steam. So if I'd been long this from this first big positive candle on Friday, I might be having got out here certainly. I may not have got back in on the open today, so we may be running out of steam. Where are we? Well, look where we are. We're at 19,000. It's a big round number. There's all that significance. There's not a lot of data today to drive the markets, but that's what that is telling us. If we look at the normal candlestick, it was probably already panicked and much more red. There we are. So you see the current candlestick interpretation is it's an engulfing negative candle as it's about to finish in 4 minutes. At the moment, you see it to close of all the previous action this morning, basically. So that's quite negative as well. So if you were, what would you have been doing if you just been looking at this candle interpretation? There's all lots of different changes of mind, isn't there? Relatively up for Friday, but chopping and changing during the Asian and European session today, and a negative start to the US cash session. So there we go. It's horses for courses, my friends. I really like Heikin Ashi candles. They've been around a long time. The guy that invented Mr. Homer, I say Homer, he created candlesticks anyway, and he's taken them a step further, or a different interpretation for strong trends with Heikin Ashi candles. So all the best, my friends. Where's my slides gone? So that's the live charts at the moment. So in summary, we're looking for big-bodied candles with no wicks. That's the key to Heikin Ashi candles. So there's different ways of doing it. You can scaling with these as the candles increase, or as we showed you earlier, simply wait for a no wick candle. Green for long, red for short, or whatever cuddles you might want to use, and get out when it changes color. So again, using technique 2 on this time frame here, what would we have done here on the hourly? So the last trade would have been a long trade here, long, and then out. And what we're waiting for now is another candle without a wick to the south or north to get us in. So that would have worked quite nicely. What about short? That would have got short, and then out. Long, stayed long, got out, but gone short as well on this candle. Not short, but then gone long here immediately. So that would have been a losing position. Nothing, and then that last long one there. Okay. So there we go. As I say, great when markets are trending. Great for all assets as well. We've shown predominantly this index markets, but it works well on stock markets. What's my panel on forex markets as well. Just look at the euro, as we've shown before. So what's the euro telling us with our Heikin Ashi candles? Well, this is it's been long, and got out, so it's a losing trade. But we would have been short here at whatever this is, 2 o'clock, and we're short, certainly short now here on the 1 hour time frame. And I wonder if that's taken out our trade. So there we go. It's nearly 3 o'clock. The hour's up, my friends. If there's no questions, I'll wrap this up. Let's just go back to my chart. So got to look at live charts. So we've looked at where it came from. It's from the 18th, 17th century. Why we use them? It's the reduction of the noise. It's the clarity. It's the fact you can see sentiment, trend all in one candle. We've explained how they are created and how to interpret them. The power of the wick is really important, and also I've explained the limitations of Heikin Ashi candles. So I mean, as I say, on the trading view platform, it's very simple. Just to click the candle presentation, and you get the Heikin Ashi candles there instead of normal candles, and you can flick between two, as we just showed there. My 3 favorite trading books of all time. We talked about that many times in all these webinars. If you haven't got them, get them. If you haven't got, if you've never read them, read them. That's all I'm going to say today. And two of my recent purchases over the last couple of years, one from 2022, The Best Loser Wins by Tom Hugard, and Mastering the Mental Game of Trading by Steve Goldstein from last year, 2024. So again, thoroughly recommend. I recommended two recent books. The others are many, many years old, but still very, very relevant. We are thePropTrade.com, my friends, and we're here to help you. If you haven't got a position, it's not a position, you haven't got an account with us, why not? Come and join us. It's very, very simple and straightforward. This is our website, thePropTrade.com. Challenge accounts are here. Oh, that's mine, isn't it? My demo account. And our evaluation accounts are here. As I say, you can do it in one step or two step. Most people take the two step to get a funded account. These are simulated accounts, remember, but using live liquidity feeds. So, and it's a very cost-effective way to get into the world of trading, and you can get discounts. We've all got some discounts sort of running. SC25, which is still current, gets you a 25% discount off any account. I say our most popular is the $25,000 one, which is normally $175, gives you $25,000 account to play with. That's great liquidity. With a SC25 coupon, you get 25% discount, brings it in for just over $130. If you haven't got $130, look at a smaller account. $40 gets you going. If you haven't got $40, you shouldn't be trading, to be honest. You haven't got $130, in my view, you shouldn't be trading. But anyway, that's a personal view. But the beauty of this is, my friends, even with a $5,000 account, you can prove yourself and you can build up, you can scale up to $200,000 account, because you've got to with the proptrade.com, you've got to stick to the rules, and our rules are very, very clear. You need to target of 8%. Take you as long as you want to get there, as long as you're not losing more than 5% on a daily basis, or you lose 10% of your account entirely. There's no rush. Again, too many traders come into this business rushing to try and make as much money as possible. The successful traders, the traders that have been in business for a long time, always focus on keeping their losses small, and that's what this is teaching you to do, is keep it pointing you in the right direction. If you can't do this, you will blow your account. So even your $55 accounts, your $40 accounts, you will blow them if you haven't got the discipline and self-control not to overtrade and not to take too many losses. Okay, but we're here to help you to stop doing that. It's about processes, about finding your way. On the Discord group that we have, every night I'll put up end of day trades. These are live trades I'm taking myself on live accounts. I've currently got 8 open. Actually, some of those might have been stopped out given what I just saw there on the euro. But this was last week. We actually had a losing week for the first time since January. But we are still positive for April so far. We're up nearly 850 points at the moment. And 8 current positions are live, or there were earlier. Some of them might have been taken back. 13.05 for the euros. That's just interesting. Has that been? It's probably been closed out, was it? I'll find it now. Anyway, come and join us. You got nothing to lose and everything to gain. Okay, take care, my friends. We'll see you tomorrow. Interesting week this week. A bit quieter than last week, but still always something going on in the marketplace. Obviously, shortened week because of the Christian Easter, both the Orthodox and the Catholic Easter falling on this Good Friday. All markets closed on Friday, and next Monday, most of the world is closed. Most of the Christian world is closed. The American market is open, but places like Canada, Europe, and Australia, New Zealand are all closed on Monday as well next week. So 2 shortened weeks in Europe, a shortened week just in the United States. So see you tomorrow. Take care, and as ever, may the pips be with you, my friends. All the best. Bye bye.